Hey everyone, and welcome back to the channel. Have you ever stopped to think about where our modern financial system actually comes from? I mean, things like banking, stocks, international trade. It all feels so complex and modern. But what if I told you that the seeds of our entire financial world were planted thousands of years ago by ancient civilizations? Today, we're going on a fascinating journey back in time to uncover how ancient economies built the very foundation of the money, banking, and investment systems we use every single day. It's a story that proves the old saying, "What's past is prologue." Stick around, because you'll never look at your wallet the same way again. Throughout history, the evolution of economic systems has been the engine driving human progress. It shaped empires, sparked innovations, and, of course, created the modern financial landscape we navigate today. So, let's start at the very beginning. The most basic form of economy is, of course, barter. You have a chicken, I have a bag of wheat, and we trade. Simple, right? Well, ancient civilizations took this simple concept and scaled it up in ways that were truly revolutionary. They didn't just trade with their neighbors. They built vast networks that spanned continents. Think about the Silk Road, connecting the Roman Empire with Han China, or the maritime routes crisscrossing the Mediterranean and the Indian Ocean. These weren't just a few merchants getting together. They were highly organized, large-scale operations. This massive exchange of goods and services laid the groundwork for what we now call international commerce. The ancient merchants had to figure out the fundamentals. What is this good worth here versus somewhere else? That's the core of supply and demand. They had to deal with different cultures, different needs, and different measures of value. These ancient trade routes were the first threads in the fabric of our modern global economy. They shaped our understanding of value, scarcity, and the incredible potential of connecting markets across vast distances. But there was a problem with simple barter, especially over long distances. What if you're a Roman merchant who wants Chinese silk, but the Chinese merchant doesn't want your olive oil? Carrying around tons of different goods to trade is inefficient and risky. This eluded money, early forms of money, like cowrie shells, or specific weights of precious metals, like gold and silver, emerged as a universal medium of exchange. This was a game changer. Suddenly, you didn't need a double coincidence of wants. You could sell your olive oil for coins and then use those coins to buy anything you wanted from anyone who accepted them. The Lydians, in modern-day Turkey, are famously credited with minting the first standardized coins around 600 BC. This was a massive leap forward. Each coin had a specific weight and purity guaranteed by the state, which created trust and dramatically simplified trade. This concept of state-backed, standardized currency is the direct ancestor of the dollars, euros, and yen we carry today. The principles of currency exchange, figuring out how many Lydian coins equaled a Persian daric, were the very first forays into foreign exchange markets. It all started with the simple need to make trade easier and more reliable. Now, as economies grew more complex with trade and currency, a new set of challenges and opportunities arose. What do you do with all the money you're making? Keeping sacks of gold coins under your bed isn't exactly safe. And what if you're an aspiring merchant who needs capital to fund a risky sea voyage? This is where another monumental innovation comes into play: banking. The origins of banking can be traced all the way back to ancient Mesopotamia and Egypt, thousands of years before the first coin was ever minted. In these societies, temples and royal palaces weren't just religious or political centers. They were the world's first financial institutions. Farmers would deposit their grain in the temple granaries for safekeeping, and in return, they'd get a clay tablet, a promissory note stating how much they had stored. This tablet could then be used to pay debts or trade for other goods. Sound familiar? It's the basic principle of a bank deposit and a check. These institutions didn't just store wealth. They put it to work. They provided loans to farmers for seeds and tools, or to merchants to finance their caravans. They even charged interest, a concept that is fundamental to all modern lending. They were essentially creating credit, allowing people to use future earnings to invest in the present. These ancient temples, acting as secure vaults and lenders, set the stage for the entire modern banking system, from your local credit union to global investment banks and even central banks that manage national economies. Speaking of investment, people in the ancient world were just as keen on growing their wealth as we are today. While they didn't have a stock market app on a smartphone, they engaged in surprisingly sophisticated forms of investment. One of the most common was funding maritime expeditions. A wealthy individual or a group of people would pool their money to finance a ship, its crew, and its cargo for a long-distance trade voyage. This was incredibly risky. The ship could sink, be attacked by pirates, or simply fail to find a profitable market. But the potential rewards were enormous. A single successful voyage could make everyone involved incredibly rich. This is the essence of a joint venture or a modern-day startup investment. Multiple investors come together to fund a high-risk, high-reward project. But they were also smart about managing that risk. They wouldn't put all their money into a single ship. Instead, a wealthy merchant might invest in several different voyages, heading to different destinations. If one ship was lost, the profits from the others could cover the loss and still yield a return. This is the fundamental principle of diversification, a cornerstone of modern portfolio management. They even had early forms of insurance. A loan to a sea merchant might have a clause where the debt was forgiven if the ship sank. The interest rate on such a loan would be higher to compensate the lender for this added risk, which is exactly how insurance premiums work today. So, these ancient investors were already grappling with and solving the core problems of risk and return that defined modern finance. From the legal codes of Mesopotamia, like the Code of Hammurabi, we see detailed regulations for loans, interest rates, and collateral. These laws created a framework of trust and predictability that is essential for any financial system to function. The Romans took this even further, developing complex commercial law that dealt with contracts, partnerships, and corporations, concepts that are still central to business law today. The idea that a business could be a legal entity separate from its owners, an early form of a corporation, allowed for larger, more permanent business structures that could outlive their founders. This legal infrastructure was crucial. It provided the stability and security needed for people to be willing to lend, invest, and trade on a large scale. Without these ancient legal precedents, the complex financial contracts and global corporations that define our world simply couldn't exist. It proves that finance isn't just about numbers. It's built on a foundation of trust, and that trust is built on law. So, as we've seen, the echoes of the ancient world are everywhere in our modern financial systems. The basic principle of supply and demand that drives global markets today was first understood by merchants on the Silk Road. The dollar in your pocket is a direct descendant of the first coins minted in ancient Lydia. When you deposit money in a bank or take out a loan, you're participating in a system that began in the temples of Mesopotamia. And when a financial advisor tells you to diversify your portfolio, They're echoing the wisdom of an ancient Roman merchant hedging his bets on different sea voyages. The legacy of these ancient economies is not just a historical curiosity. It's deeply embedded in the very fabric and logic of our financial world. They tackled the fundamental questions of value, risk, trust, and growth. And the solutions they devised have been refined and built upon for millennia. Understanding this history gives us a profound appreciation for the systems we often take for granted. It shows us that finance is not some recent, abstract invention, but a set of tools and ideas that have evolved over thousands of years to meet a fundamental human need: to create, trade, and build a better future. I hope this journey into the past has been as eye-opening for you as it has been for me. The connections between history and finance are truly endless and incredibly insightful. Join us in our next video, where we'll be exploring another fascinating link between the past and our present. If you enjoyed this, please give this video a like, share it with someone who might find it interesting. And don't forget to subscribe and hit that notification bell so you don't miss our future explorations. Thanks so much for watching, and we'll see you in the next one.